Hey everyone, welcome back to the ESG investment page, and today we're going to be talking about a company that I think we might have heard of called First Solar. So First Solar is one of US's largest, actually it is the largest and most advanced solar technology companies, and they focus on designing and producing PV solar panels which are used in utility scale solar power plants around the world. First Solar matters because it brings affordable, scalable, US-made clean energy to the grid without relying on fossil fuels or overseas supply chains. By using their panels, we significantly reduce emissions, conserve resources, and move towards a more sustainable energy future. So the competitive advantage that First Solar has is that they use thin film technology instead of silicon, which is faster and cheaper to manufacture, more efficient in high temperature environments, and has a lower environmental impact per watt produced. And speaking about their environmental impact, First Solar, we all know solar is generally better than fossil fuels for energy. They produce 20% less carbon dioxide per kilowatt hour than coal and 10% less than natural gas over their whole life cycle. And lastly, investing in First Solar and supporting any solar company in general displaces fossil fuel use. A typical utility scale First Solar plant, around 100 megawatts, powers around 60,000 homes per year, offsetting thousands of tons of carbon dioxide annually. So now let's talk about some of the financial metrics related to First Solar. Despite, we all know, Trump's administration is not really favoring the clean energy industry. They've long favored fossil fuels due to political reasons. But despite that, in 2025, we've actually seen a decent amount of growth in the clean energy industry, specifically due to the need for AI and data centers and the energy needed to generate enough energy to cover these data centers. And that's why some of the clean energy companies are growing. But for First Solar specifically, let's first talk about its capital expenditures, right? Unfortunately, they have spent a lot of money on capital expenditures over the past many years, and their operating cash flow is actually lower than their capital expenditures, meaning they're spending more money than they're bringing in, and their operating cash flow to CapEx ratio is around 62.2%, which means that 62.2% of the CapEx is covered by their OCF. And this might seem like a negative metric, but it just means that currently First Solar is in more of a developmental phase in their operations, where they're reinvesting a lot of capital for future growth, basically. And to kind of support that, we have another metric called return on invested capital versus weighted average cost of capital. And this just means that for the, it's like a rate, a WACC is basically a hurdle rate that investors want to see that the return on invested capital to exceed, basically to bring in profit, right? And if the return on invested capital is greater than the weighted average cost of capital, it means that the money they're spending on projects and stuff like that, like cost of capital, like for example, capital expenditures, is actually generating revenue, okay? And the ROIC and WACC for First Solar has actually been quite volatile in different years. For instance, I think for trailing 12 months as of today, the WACC actually exceeded ROIC, and it just means that they are not over the hurdle rate just yet, but for some other years, the return on invested capital was actually greater, 150.8% for mid-2025 around, and that just means that the return on capital is actually greater, so that's bringing in revenue, right? So overall, First Solar seems to be more in the developmental phase, but if you see their stock price has actually gone up kind of crazy lately. If I search up First Solar's stock, I mean, in the past 6 months, it's gone up 75.3%, and year to date, 47%. So that's crazy growth despite a supposedly unfavorable macroeconomic condition. And that's possibly due to, first of all, its strong earnings a few months ago, They recorded sales of over 27% year-over-year increase in 2024. 2025 has not come out yet, but this strong sales shows that the company is actually generating profit. It's not just like a shell company and people are just raising its prices or buying because of speculation. And we can also see its valuation and how overvalued or undervalued it is based on the EV over EBITDA ratio, which is just enterprise value over earnings before interest, taxes, depreciation, amortization. And it's around 13.8, which if we do for the clean energy sector, if we compare that to the industry average, it's around 21.7. And so the EV over EBITDA for First Solar is around 13.8. So it is not, due to different valuation methods, it's not super cheap, but it's not overly overpriced either. It's way lower than industry average, meaning that people are actually paying a reasonable price for its earnings. And lastly, we just briefly talk about the beta. I mean, it's around 1.59, which means for every $1 market goes up, it's gonna go up 1.59 or go down 1.59. It's significantly more volatile than the overall market. It reflects sensitivity to broader market moves and the inherent commodities such as policy sensitivity of the solar and energy sector, which I've covered earlier. So overall, I think First Solar is really in a developmental phase, but it shows really strong growth prospects, especially since the future is about clean energy, because fossil fuels, we all know, is not sustainable at all. So, I mean, in addition to the financial metrics of First Solar, we kind of have to look at its ESG ratings, because it is an environmental company, and generally it is a good practice to look at ESG ratings of different companies to see their long-term risk and also how humane the company is and the ethics of it, and if someone is comfortable in investing in said company. And obviously First Solar is a widely regarded ESG leader, and it generates strong environmental, social, and governance practices across its operations. I mean, in environmental, pretty obvious due to its solar generation, right? So it has ultra low carbon footprint, it's high value recycling, and it has tons of resource efficiency. And they also, I mean, a lot of companies do this, but they do have a net zero commitment, net zero emissions by 2050, and it doesn't use deep sea minerals, because obviously mining deep sea is quite harmful for ocean ecosystems. For its social factors, it's really a leader in human rights. I mean, First Solar was a top-rated solar manufacturer in the 2023 Renewable Energy Human Rights Benchmark. The company's global manufacturing sites in US, Malaysia, Vietnam has undergone third-party social audits and earning platinum status under the Responsible Business Alliance Validated Assessment Program. So in general, socially, it is quite solid, right? It also does a lot of community engagement, which is another part of the social metric. It supports local communities via green education, clean energy, and drinking water access, and area-specific charitable giving through the First Solar Charitable Fund and partnerships with non-governmental organizations. And for governance, governance is quite simple. It's all about transparency. First Solar's sustainability reports and annual filings provide transparent third-party validated data on ESG performance. They have a responsible supply chain. They try to uphold strict supplier codes, avoid sourcing problematic materials, and promotes full traceability in their supply chain. And they do have a lot of strategic oversight in terms of ESG and ethical business conducts. And they always try to improve. They monitor ESG standards continuously, adjusting to evolving stakeholder, regulatory, and industry expectations. So just some of the key environmental targets that they've hit is for the 2023 greenhouse gas emissions, they are negative 13% year over year, so they're reducing greenhouse gas emissions as they go on. Water intensity, negative 32% year over year. Material recovery, they're at 95%, which is quite high for all companies, and it is actually the world's largest recycler relatively. So overall, we see First Solar's ESG health being wonderful. So lastly, what can you do? Right? So I've talked this much about First Solar and their financial metrics, ESG metrics, but there's stuff that you can do as well to advocate for clean energy, right? Despite the macroeconomic conditions being unfavorable and policy conditions being unfavorable for clean energy, you can attend city council or school board meetings and ask about transitioning public buildings to solar, right, or speak to local representatives in support of renewable energy incentives, clean energy bills, or community solar programs. You can encourage local utilities or schools to offer or join a community solar project. And honestly, education is a big part. You can host a clean energy club or try to relate it to something that a lot of people enjoy, because it's often kind of a stigma about clean energy and how it's like unfavorable because of the indoctrination that Trump has tried to give everyone. So hosting these clean energy clubs for more awareness, or try to relate it to something people are really interested in, like finance, clean energy, investing, finance. Just overall trying to bring awareness to clean energy and trying to advocate for clean energy favorable policies. And thank you for listening to this video. And just to end off, this is not investment advice. But thank you, and I look forward to hearing more of everyone's thoughts and hopefully seeing you in the next video as well.